Welcome, dear traders. Today, Asian stock markets are trading with gains. Investors shrugged off fears about a slowdown in the global economy. They are confident that China's economy will eventually recover. They are also waiting for Beijing's moves to improve the weakened real estate sector. Expectations of economic growth in China and the United States are likely to be the main factors for assessing recession fears. Today's rally on Wall Street was largely fueled by yesterday's sharp rise. US stocks advanced following upbeat earnings reports of the largest American retailers. Strong quarterly reports of the US giants indicated that the Fed could hike rates further to cap inflation. And today there will be many crucial economic reports that may either trigger a trend reversal or facilitate the current rally. A rally on Wall Street gives the Fed room for maneuver when it comes to aggressive rate hikes, and yesterday's surge in stocks prompted investors to revise their expectations. They are now pricing in a 41% chance of a 75 basis point rate hike at the September meeting, up from 39% the day before. Even so, it will be the third consecutive 75 basis point rate increase. However, the current rally is somewhat cautious. Traders analyze fresh macro stats, but they are not in a rush to open new positions. Before the September meeting, there will be many reports that the regulator tracks when making monetary policy decisions. Some of these indicators are quite disappointing. Yesterday's data revealed a disbalance in the US economy. If the industrial production reached record highs, US home building fell to the lowest level in nearly 1.5 years in July. Today, speculators are anticipating the U.S. retail sales report. The report is expected to reveal whether there are signs of a recession in the U.S. economy. Analysts forecast a positive reading. However, traders should always be ready for an unexpected turn of events, especially in the current unstable economic situation. The US dollar index jumped to a 3-week high of 107. It may signal a further rally of the greenback. Demand for the US currency has largely been facilitated by the risk aversion and dismal economic reports on the top economies that reinforce the global recession fears. On the top of that, the Fed sticks to a hawkish stance despite signs that inflation has perked. During the Asian session, the US dollar index faced bearish pressure. It lost momentum, dropping to 106.40, and traders are unwilling to open new positions as fresh macro stats and other events may largely affect the trajectory of the US currency. If new reports are positive, the greenback is likely to resume growth to the August low of 107. After reaching this level, it may try to break through a high of 107.42, and the last time the US dollar hit this level was after the July FOMC meeting. Traders will get more clues about the central bank's future plans as several Fed officials are scheduled to make speeches this week. Besides, the FOMC meeting minutes are also due. If the minutes and speeches are less hawkish, it could undermine the current rally of the US dollar. However, compared to the Bank of Japan's ultra-loose monetary policy and other major central banks, the Fed maintains the most hawkish approach. The dollar-yen pair was flirting with 134 in the Asian session today. However, it's unable to climb higher. Even yesterday, it was hovering at 133. If the pair breaks through 134.10, it may rise to 135.60. Despite the signs of recovery of the Japanese currency, traders will hardly count on its further growth against the US dollar. There is no reason to be optimistic. The widening gap in the government bond yields between the Bank of Japan and the Fed will weigh on the yen in the foreseeable future. High commodity prices are also pushing it down as the weak yen hurts businesses. So the pair is expected to touch 140 in the second half of the year. The AUD USD pair is trying to recoup its early losses. The quotes have already climbed above 0.7000, which is a quite good result in this situation. The main bearish factor for the Aussie is a likelihood of a further contraction in China's economy, so its consolidation above 0.7000 may not last long. Yet, as the pessimism is ebbing, the pair may try to regain ground. Internal headwinds could also undermine its rise. In its meeting minutes, the Reserve Bank of Australia said about downside risks for the economy, and the central bank does not rule out further aggressive tightening due to soaring inflation. However, it did not confirm such plans. It seems to have taken again a wait-and-see approach. As a result, there were no positive drivers for the Aussie. A retreat of the pair to 0.7200 and 0.7300 is unlikely to occur before the start of the fourth quarter. Now investors are looking for clues about whether inflation has perked. Any signs of it may indicate a more favorable scenario for the US economy and the global one. Judging by the dismal situation in some markets, it's still early to count on a steady recovery. And that's all for now. Subscribe to our channel and keep close tabs on the market developments. See you soon.